Greetings, my fellow wealth hackers. This is the Truth About Real Estate Investing show. My name's Erwin Cito. Does anyone actually like moving? I mean, selling their house, buying another house, and moving. I've had guests on this show who've moved 10 or more times, which has proven a great way for them to make money. But it's not for me. I enjoy stability. We moved into our new house. For those who are watching on video on YouTube, I'm actually in my house right now recording this, and it's been awesome. Our master bedroom faces east, which is different from our old house. Our master bedroom faced west in our old home. Now in our new home we faced east, so we wake up to the sun shining into our window in the mornings, and also now in our newly renovated master ensuite bathroom. With the bathroom, Cherry and I we're often in a hurry, so we designed our bathroom this way. So we tore out the single vanity sink and the corner tub and replaced them with a wider vanity featuring 2 sinks. We expanded the shower. We didn't replace the tub, so we have a tubless master ensuite. But our shower is about 5 feet by 3.5 feet. FYI, 3.5 feet is about the minimum width of a hallway. There's also a bench. I don't think anyone plans on sitting there, but there's a bench. The original shower was actually enclosed with drywall and tile and whatnot, and there's just a shower curtain to close it off. So we've replaced it with our shower wall is glass and a glass door, so the sun actually will shine in through our window and actually through our glass wall as well, our glass shower wall as well, onto us. So it's a great way for us to shower and get some nice vitamin D in the morning. What about privacy, you say? We just leave the window open? Yeah, we do. We leave the window shades open because we don't have a back neighbor, which is one of the greatest features about the house. Is the house backs onto a pond. So our back neighbor is probably around 300 yards away, maybe more than that. It's pretty far away. So our back neighbors can't really look into our back window, and I'm really enjoying this home and the new view in the backyard. The view is great. I enjoy just standing there in front. I catch myself standing in front of any rear-facing window out at the pond. I feel like I'm in nature, and I just simply enjoy watching the ducks in the pond. And in the winter, I can't wait to teach the kids how to skate. So I like having my bedroom face east. I like having my bedroom face east so much that I wanted it for my kids as well. So we stuck both kids into one bedroom that also faces east. Unfortunately, that happens to be the smallest bedroom in the house, it's about 10 by 10. So they're in bunk beds, which they think is great. I think it's actually hilarious. They have no care that they're in the smallest bedroom in bunk beds. They didn't even ask questions why they didn't get either of the bigger bedrooms. They're just happy to be together. So no idea how this is all going to work out, but we'll see how it goes. But those damn bunk beds, they're IKEA, and it took me about half a day to assemble it. Anyways, since we can't travel for March break in April, we're opening the pool this weekend. April 10th, I think it is the date of our pool's opening. Yes, that's earlier than pretty much anyone ever does, but we wanted something for the kids to do over the break. I have no idea how this is going to work out. I have some friends who think that we can heat up the pool within 2 days if we crank the heater. So we'll see how it works out. I wonder, we'll see how it goes. We'll see if we can get the pool over 60. It's definitely interesting times we live in, and I'm grateful to be a wealth hacker. A wealth hacker I define as someone with a small business owner, a real estate investor, a stock hacker, and we happen to be registered charity operators as well. So with being a wealth hacker, I can stay busy, I can make money, and I can help people. I hope you're all out there staying healthy, and if you need any help staying or becoming a wealth hacker, simply just, if you're on our email list, you get invited to all our free events, our free trainings, our free virtual tours, or you can join our soon to be Truth About Real Estate Investing forum, where we're in the middle of creating now. It doesn't exist yet, but as soon as it does, you'll find out about it if you're on our email list. We'll let you know so that you can join it and interact and bounce ideas off other like-minded real estate investors. if you're not on my email list, that's just silly. You can join by going to www.truthaboutrealestateinvesting.ca. Again, that's www.truthaboutrealestateinvesting.ca. Just enter your name and email address, and you'll be on our email list. So speaking of events, so one of our events that's not free, but we donate all the proceeds to charity. Saturday, April 17th. That's a Saturday morning. Our next iWIN meeting it's all virtual, so you can tune in while wearing your pajamas. The topics include what is the best side hustle. My friend Chris Hook, who has tried them all: real estate investing, essential oils, multi-level marketing, e-commerce / I call it selling stuff made in China on Amazon, and of course stock hacking. He's gone through all of them. He spent quite a few years on each of these, and he's going to share the realities of each. He's going to share complete numbers so that you too may choose what is the optimal side hustle for yourself. The more six-figure side hustles, the better, in my opinion. Also, we have the co-founder of Life at Key, Daniel Dubois. He was our guest on our previous podcast. He's an ex-Airbnb executive, and he's going to share how his new real estate business is allowing folks to buy real estate for as little as 2.5% down. On average, that's about $15,000. I know I'm super excited to learn more about how he is being able to make this possible for so many people who are struggling to get into real estate in this crazy, crazy market. Now on to this week's guest, my wife, real estate accountant Cherry Chan, CPA, CA, lots of letters. And we covered a wide range of topics. For example, what investments work best based on the tax returns her team is preparing. That's one of the nice things when you know someone personally and that someone you invest with whose team reviews hundreds and hundreds of tax returns, so then we can learn what other people are doing that's actually successful. Because the truth about real estate investing and all that stuff out there's lots of people who aren't successful real estate investors who pretend to be successful real estate investors. So it's nice to actually see their tax returns and see what they're actually telling CRA how much money they're making. So again, she doesn't go through specifics, but she understands which strategies work best with me. And so that's how we invest ourselves, and that's how we teach our clients how to invest. Anyways, so we talk about best investments. We talk about how to maximize tax savings on mortgage interest on your home, why buying an electric vehicle like a Tesla makes financial sense from a tax standpoint, what it's like being a crazy entrepreneur, married to a crazy entrepreneur, and so much more. FYI, Cherry will be our May iWIN meeting keynote speaker, presenting in detail how to maximize those returns using the Smith maneuver, which was made so by popular request. I hope to see you there, and I hope you enjoy the show. I think this is 5 years we've been doing the podcast, and this is by far the most professional we've ever been.
Yeah, of course. We have a professional here.
Thank you, Adam. I know a lot of you can't see, but we're actually having some high-end mics for once, and we have some cameras going on. Adam, our videographer, is helping us out today. But let's not talk about that. We're here to talk about Cherry Chan. So what's keeping you busy these days, Cherry?
Tax season.
What's a tax season?
What's the tax season? Basically the government needs to collect their taxes.
Yeah. So
we're doing tax returns.
When are taxes due?
April 30th for majority of the people. For self-employed people, it's June 15th.
Was it always June 15th, or was that pushed?
No, that's always June 15th.
Okay, that's how much I know.
That's June 15th as the deadline. The taxes are still due April 30th.
Mm-hmm. So this podcast will probably be heard in about 2 weeks. So that'll be like we'll be about mid-April. Are you accepting new clients?
We're always accepting new clients. We're just not accepting new clients for doing the 2020 return with a guarantee that they can be filed by April 30th, right? Mm-hmm. We would try our best, but there is no guarantee.
Mm-hmm. That's probably the top question I get, actually.
Yeah.
I don't know why people ask me, is Cherry still taking on new clients?
Yes, absolutely. We always are looking for new clients. Look at the number of people that's working outside.
Can you talk to that? How many... your business has grown significantly. And you know, I live it every day. It's kind of like when you look at your kids and they grow, you don't always notice that they're growing. But we had Susan White here just a few weeks ago when we were red zone. This is pre-lockdown, folks. We were talking about real estate, so that's an essential service, so that's allowed. But when Susan came in, she said, "Who are all these people?" But people have seen, like, we've shared pictures of this office on this podcast on our social media, but I guess a lot of people don't know how many people have started working here since that time, since we moved in. When did we move in?
I think June 2020.
Yeah, great time to invest heavily in commercial office real estate space.
We bought the place pre-COVID.
Yeah. So actually, let's talk about that. So yeah, we offered in December. No, we closed in December.
No, we offer in December, early December or late November.
Right. Yep. So pre-COVID, pre any inkling of COVID. Yeah, timing couldn't have been worse, really. And then we closed when?
February.
We closed in February, and then we were like full blown COVID. So renovations were extremely delayed, almost irrationally delayed. I remember we wanted someone to measure for window coverings, and the building was entirely vacant because we're under lockdown. They were worried about COVID, but the entire building's vacant, and they work by themselves. So they were worried about COVID, about having to measure for window coverings. So that's just one of the many delays we had in getting this place ready. So then we moved in June.
Around June, or I think it's June.
Do you remember how many staff you had at that time?
We may have like a couple of people coming in. We always have a team. It's just that we always work remotely.
Right. And how many people was that?
I would say 4 or 5 people.
4 or 5 people. And then today, how many staff do you have?
15.
Right. So you've gone 3x in 8 months?
It's a different model back then. We were leveraging more subcontractors, and now we are leveraging more local employees. And we might go back for a combination of both. Yeah.
So you can understand why there's only 15 people here. It feels like there's more.
Well, there's more because our other team also grow. You're just talking about the accounting team. The accounting team only 15 people. Yeah.
And I just wanted to paint the picture. This is why your business is able to keep accepting new clients, is because you've actually scaled up. It's not just Cherry Chan anymore.
No, it's not.
Awesome. And I want to talk about buying a house. Because it was your idea to buy a house.
So we moved to this Oakville location. For those of you who don't know where this place is located, it's Oakville, Trafalgar, and QEW. And I always considered this as a first world problem. I wanted to move closer to the office so then we don't have to take the QEW to work. Because we live in West Burlington.
Just to pause you there. It may be, you may call it a first world problem. It's actually one of the well-known secrets to happiness is a short commute. So living close to work is not is healthy for everyone.
And I wanted to buy back some time to spend with my kids. So that's the reason why I wanted to move to Oakville. And for those of you who follow me, I have gone through this whole thing called turning myself into a mortgage virgin. And it's a long process, essentially moving some of our rental properties, mortgages to the corporation's name so that I can qualify to buy a bigger home, not necessarily a bigger home, but if you think about it, a more expensive home in Oakville in our personal name. And so I've always been looking, and I've always been thinking about moving. It hasn't come real until this house popped up in Oakville. And this house, we know about it.
So we knew the seller. They're actually friends of ours. So we visited the house before. And then you mentioned it popped up. What happened?
So I've been always doing window shopping, meaning that I've always been like browsing realtor.ca to look for the right house for us that we don't have to go on QEW to come to the office. And so we have a search set up for ourselves, and this listing pop up, and I immediately message the seller, who's the listing agent, and I'm like, what do you want for this house?
You
What's
the
the closing?
That? It wasn't even like, can we see the house?
I didn't.
I
figure that we don't need to see the house because we saw the house before.
Right. So you were offering on the house before you even told me we were offering on a house, or that there was a house of interest to you, and before we saw it. Okay. Continue.
And Erwin was in an all-day meeting of some sort, some mastermind
as
group
my real estate
meeting.
mastermind meeting.
Yes, yeah. And then he wasn't available to talk to me, even though he's in the office. So I just decided to go ahead and ask for the closing date and what he wants. No, seriously, I could even show you that text message that I sent to Mike.
Right. Okay, so I feel like it was my idea to actually go see the house.
Yes, I wasn't planning to see the house myself.
So I think you first told me about it at lunchtime.
A little earlier, I think, but that's okay.
Okay. So maybe we talked about it at break, when I was at break for my mastermind meeting. Okay, and then we booked it with Mike, the seller, to see it at 3 p.m. I believe, 3 or 4 p.m. And you were, yeah, because I remember when I said let's go see it, and you were like a surprise, like, yeah, okay, we can go see it.
Well, I had meetings scheduled. I have to rearrange the meeting.
Yeah. Oh, yeah. It's a small investment, this house.
It may sound funny, and that's the only house that we've seen.
Yeah, that's actually a good point. We weren't in search mode. We weren't pre-approved for a mortgage. We hadn't gone to look at anything other than occasionally look at something on realtor.ca.
I think when there is a will, there's always a way. So if you buy the property first, then there's always a way. Of course, the house that we closed. So obviously we qualify for financing. It passed everything.
Right.
We're moving.
You know, when I think back though, if we hadn't seen the property, I don't think I could have negotiated the way I did.
What do you mean?
So it was actually when we finished looking at the house on the inside, and then we walked around, everything looked fine. And then when we went outside and walked on the path directly behind the house. So folks, for folks listening, I'll paint you a mental picture. The house backs onto a rain catchment, which looks like a small pond, right? So there's no back neighbor, and that pond is surrounded by a gravel path. So after our viewing of the house, we left the home, and you and I went walking with our one of our mentors, Eves. We walked behind the house to walk the path, and then it was actually at that point you reminded me it was always your dream to live with a view of water.
Yes.
And then for me, it was that point where, okay, we can't lose this house.
Yes, in a way. Yeah.
Right.
Well, like the only reason that triggered us to jump in on this opportunity is really because of the view, and also the swimming pool, and also the walkout basement. So all these factors come together. I think recently I listened to a book called A New Earth.
Eckhart Tolle. Yep.
Yes. So he mentioned that everything happens for a reason. So I believe that too. Like the house chose us, and we choose the house. So
we live a bit of a blessed life.
Oh, extremely.
I feel like I take some risks just knowing that we live a blessed life. Knowing that things are just going to work out. Like, folks, again, we didn't have a pre-approved mortgage. And so after that point where you reminded me that it was your dream to live in a home with a view of water, that's what triggered the moment inside me. Okay, negotiation is now, we're playing to win. As in, for anyone who follows sports analogies or not, you play to win, right? Losing is not an option. So that's when, so I typically negotiate these deals for our family. So that's when I went to negotiation mode with the seller, Mike, who's a friend.
Who's also an extremely good
he's extremely good
sales agent.
Yeah. It's funny because I told Eves on the way up, wait till you meet Mike. He's really good at sales. Mike is really good. And so it's actually, I remember thinking back at it, it was a pleasure to it was an honor to negotiate with Mike on something so high stakes. So it was we weren't negotiating a position of strength at all, because gorgeous house with a view, Oakville. The time, it was December 2020. So I remember it was more playing towards like, what do you want, and we'll give it to you, right? And that's basically how we got the offer done. Not only do we get the offer done, the seller prepared the offer for us.
I think we just got extremely lucky in a way, because Mike never, we know as as a sales agent yourself, we all have experience negotiating deals. We know how to negotiate a better deal. Mike was nice to us.
He was nice to us in that he didn't shop the deal.
Yeah.
This is the first day, for folks listening, it was the first day it hit the market. So we were there, just hours after it was listed, and then we were offering firm with the expectation to win. And then I forget what my next point was, and again, in hindsight, to renovate our house to the same level as that house, like remove the location out of it, remove the view backing onto a pond out of it, just the renovation delta alone between that house and our house was probably over $300,000.
Yeah, well, the reason why we're moving is because there are things that we need to do to our current home that would cost a fortune.
Yeah, at least $300,000.
Yeah, to get to the state that the new house is currently in. So this is really the reason, one of the reasons that why we're moving.
And then from a financials decision, we can finance. By buying the house, we're financing the whole thing versus having to come out of pocket $300,000.
Yes.
And living through a renovation.
Yep.
And probably waiting 2 years to get a pool.
Yes.
And waiting for all the landscaping to get done, but instead we just bought it all and financed it all at historically cheap interest rates. And then on top of that, we got the location and the view. So yeah, we got lucky.
Got extremely lucky. Always.
So let's talk about the mortgage virginity part, because that was part of one of the many moving pieces to us getting our mortgage on our home.
Very painful.
Thank God you took care of it.
Yes, you're so lucky.
Yeah, I've mentioned it on the show before. The ultimate wealth hack is to marry your accountant. It makes your banking so much easier.
Right. So I think back earlier last year, sometime during summer or fall, one of my team members went out to buy her 4th or 5th rental properties in Kitchener. So she always bought her property inside the corporation's name, in her corporation, even right from the get-go. So she financed it with a bank that worked directly with the corporation, and then this time around, the same bank would not allow her to get an 80% loan to value mortgage. So then she went traditional. She went back to the mortgage broker channel, and the mortgage broker said, well, we can finance it, but you have to own it in your personal name. The reason why they could pull it through is because the houses, the 3-4 houses that they initially purchased inside the corporation, what the mortgage broker discovered is that the credit, the mortgage was not registered. All these mortgages were not registered in her name, in her credit report. So therefore, on paper, it looks like as if they don't have those liabilities. And that's the reason why she was able to qualify to get 80% loan to value on the latest purchase in her personal name. And that's the aha moment that we have. Hey, if you buy the properties inside a corporation, chances are there's no guarantee, because I'm not working for the bank. I don't work for the mortgage broker. I don't work for anyone. It's just an experience share. Chances are you might not be able to, hide or control what you disclose to the bank. Now, I disclose everything to my bank when I buy the properties, and when I move it to the corporation. I disclose everything. Whatever they choose, it's up to them to use. But what we did is that, hey, if you buy in the corporation, they don't register the lien in your personal name. And sometimes it's beneficial, especially for us buying our primary residence. We're able to tell the bank, hey, like these properties are owned in the corporation. It's not us. And their formula does not require them to use the numbers, in the mortgage and the debt service ratio in our personal name when we purchase our primary residence.
And then we put it to the test with Meridian. Meridian, who has our properties in our corporation, they gave us the mortgages. Remember, we went to them, did we not, to finance our personal house?
Yeah. Yes. So
so they have full visibility complete visibility into what we own.
Yes. So to turn ourselves into a mortgage version, the first step I did was to move all these properties that we own in trust for the corporation to actually own it directly inside the corporation. And so we approached Meridian. By no means I'm endorsing Meridian. It's just one of the banks that are willing to work directly with the corporation. So I get my mortgage approved by Meridian inside the corporation. We transfer all these 3 mortgages into the corporation, 3 properties into the corporation. And then that deal was done. And then we go to Meridian and we said, hey, can you also try to finance our primary residence? And it was then I realized that the personal mortgage side, they don't even take into consideration what we own in the corporation. And we're working with the same bank. They know that we have 3 properties, 3 mortgages with them. But because they're not registered in our own name, they don't take into consideration what's being reported in the corporation side. Was a very interesting process. Yeah.
Even though they had complete visibility.
Exactly. They don't even count. They know it. They just did the deal for us.
Right.
Yeah.
And again, folks, this is just our experience with one lender. We don't know how other lenders will behave.
Exactly.
Yeah. Awesome. And then, And again, folks, we didn't have financing for this house. Can you explain why it was so challenging for us to get our mortgage on our principal residence? And again, folks, understand, we already bought our house contractually. We had unconditional. we had a really solid deadline to that we needed to get a mortgage for this house and close on the deal.
I think one of the challenges is that we carry all of our mortgages in our personal name. And the other objective as an accountant or just average Canadian, everyone has the same objective, pay less tax. So to structure our business properly, what we had been doing is to minimize the amount of personal income taxes that we pay and maximize the income in the corporation side. The corporation side is we're only paying 12.2% tax. So in a way, if whatever we leave in the corporation is only going to be taxed at 12.2, but anything that's being distributed to our personal name is going to be taxed at a higher rate. And because we religiously practice this planning process, we always report very low income. And therefore, for us to qualify for a bigger mortgage is hard. And the fact that we carry so many different mortgages also didn't help.
Yeah, in our personal name. So I don't know what the next question is. There's almost 2 questions I need to ask. So if there's say a new investors listening, how should they start? Or is the better question, who should start with their first investment property in a corporation?
Well, there are many different reasons to set up a corporation. It really goes back to the investor's objective, long-term objective. If you plan to buy many, many properties, then I would recommend them to start with a corporation, because when they own it in the corporation, it doesn't affect their personal credit. I was just on someone else's podcast. I think
there's no other ones out there. Was it Andrew Hines? That guy?
Yes, I was on Andrew Hines' podcast.
Who's an ex-mortgage agent.
Yeah, we discussed this whole strategy thing, owning properties inside the corporation and not having them recorded in the personal credit report, which allowed everyone to qualify for more mortgages down the road. That was really interesting concept. And by having them in the corporation, you're positioning yourself to reuse your personal credit with multiple corporations. and potentially buy more. So that's how I would position if I were to start all over again.
Right.
Now, if you're saying, okay, I don't know how many I'm buying, well, then it goes back to other criteria too. If you look at, do you own a small business? If you own a small business, if you are you have your personal real estate corp, or if you earn stock option trading income and a lot of it, you do day trading, then those are the criteria that we need to look at on top of just, being a mortgage version. So we look at a big picture on a high level, holistic basis that, okay, mortgage qualification, having a corporation help. But if you're not buying more, then it doesn't really make any difference. Then we look at if you have small business income. If you have small business income, it's much easier. You have a higher base, you're using CRA's money to finance the purchase of your properties. That would be beneficial. Do you want legal protection? Legal protection matters. And as much as other people say, insurance alone is sufficient to cover your potential liability, the reality is, well, insurance company has to protect their bottom line as well. You better read all the fine prints in terms of the terms and conditions. Make sure that they do cover what they say they would cover. Whenever we file a claim, the first thing that they do is to go back to the fine prints and see if you comply with everything in the contract before they release the fund. So that is our experience. That has always been our experience. In our lifetime, we had 3 claims. And they always look at what had been happening to see if we're complying with the policy. So those are the criteria, general criteria. And then in the future, if you want, the cost of transferring the properties to the corporation could also be extremely expensive. The cost includes land transfer tax. And then it goes back to where the property is located. If it is located in Toronto, you have to pay double land transfer tax to transfer it to the corporation. So it goes back to, like, realistically your long-term plan first and foremost, and then what else is in your life that could be beneficial from using a corporation.
Not an easy answer.
No, that's why we do the consultation, right? Really look into your situation. People always ask the question, should I just wait until I got 3 properties before I set up a corporation? Well, I don't know. Like, it's hard to answer.
Yeah, because if your plan's 10 properties, then...
Yeah. And then also, sometimes your plan is to flip those few properties. The strategy also matter. Flipping is income. So if you report the whole profit that you made from the flip, 100% of it is taxable in your personal name. And if you already got like $100,000 salary job to begin with, adding another $100,000 is not helping.
If people want to learn more about this, where should they go?
They can visit my website at realestatetextips.ca. And then you can also set up a time to have a one-on-one meeting with my team. There is also a free report on my website that you can download about these 7 criteria that we look at and discuss with our clients to determine whether they should set up corporations or not.
Right. But if someone wants to cut to the chase and actually have a consultation around their specific situation,
they could email us at records@cccpa.ca.
Records?
Yeah.
Why is it called Records?
We like that. Records at CCCPA. I mean, the cccpa.ca works too.
Yeah, interesting. I didn't know this. You mentioned saving on taxes. So I remember you were reading Smith Maneuver. You were reading the book Smith Maneuver a couple months ago.
Absolutely. Mm-hmm.
Did we do everything right?
Oh, no, we didn't do everything right. It was a big aha moment.
Okay, actually, first off, what is the Smith Maneuver?
So in summary, it's how you turn your primary residence mortgage, which would normally be non-deductible mortgage, to a deductible mortgage. Mm-hmm.
So investors, please listen to this.
So when you like, for example, we're now buying our primary residence, mm-hmm. and we have a large mortgage on mm-hmm. it, and that mortgage, if you incur a loan to purchase your primary residence, which when you sell is not taxable, therefore the interest you incur on it is not deductible. Now, is there a way to turn this whole thing into deductible interest? Yes, there is, if you invest. And that's what Smith maneuver is about. Turning it into a deductible mortgage.
So what did we do wrong?
So in the past, I thought Smith maneuver is just, okay, you take whatever you net. So you, for example, we invest in rental properties. So we take the rent, we use the rent to pay for mortgage, we pay for all the expenses, property tax, insurance, and then whatever that's net, that net cash flow, we would then use that net cash flow to dump it into our primary residence mortgage. And by dumping it into our primary residence mortgage, the same amount that you dump into the primary residence mortgage, let's say is $100 a month, so $1,200 annually, that $1,200 will become available as part of your line of credit. So the first step to set up the primary residence HELOC, the first step is to set up a HELOC on your primary residence mortgage. Not everyone is offered that HELOC, but you should have that HELOC set up as the first step to make this work. And so in the past, we take the net amount, net cash flow, dump it into the primary residence mortgage, and that's how we do the Smith maneuver. But the reality is you should take the gross rent and dump it into the primary residence mortgage. And when you take the gross rent, let's say it's $2,000 a month, then it would be equivalent
a lot more than $100 a month.
Yeah, exactly. It's $24,000 annually. You take the $24,000, dump it into your primary residence mortgage. Now, all of a sudden, the line of credit, the HELOC availability is increased by $24,000 for the year. I'm using an annual number. So you can take that $24,000 out and dump it into a specific account just for expense purpose, for that rental property expense, and use that amount to pay for the rental property expense.
Do you have a rough idea what the savings would be?
It would be the interest the tax on the extra interest that you incurred.
You have a calculator handy?
Well, like if we use the highest marginal tax rate in Ontario, is about 53%. Let's just say it's 50%. So on $24,000, let's just use a $24,000 rent times, let's say 3% interest rate, line of credit. It's $720. You get this $720 interest expense as a tax deduction. So if your marginal tax rate is about 50%, so you save $360.
Right.
Now, $360, it may not seem like a lot, but you may be earning way more than that $24,000 that I mentioned. And this $360 is just by redirecting the funds. Some people's argument to this strategy is that you would have to carry a lot of interest. Yes, you do carry a lot of interest, but you are carrying that debt anyway. You didn't have that $24,000. You would have that as your primary residence mortgage. You're carrying it as a debt. Right now, you're just converting it and making it a deductible debt. It's a cash flow maneuver, essentially pushing one stream of cash flow through the primary residence mortgage, rinse it through the primary residence mortgage, and put it through your rental property.
Right. That's essentially free tax savings.
Yeah, exactly. By just redirecting the fund that you have.
So for someone with 10 properties, that's $33,600. That's
$360. Oh, yeah. Three. Oh, yeah.
Right. That's a very nice vacation.
Yeah.
Just by rerouting dollars.
Yeah. And this would work with like investment, with stock option trading as well. You just take out the money, rinse it through the account, and take it out through your line of credit, and then soon enough, your whole mortgage would be turned into your whole primary residence mortgage would be turned into a tax deductible mortgage.
And some people do pay more for their mortgages. Like a friend of ours was just paying 5% interest on their mortgage at a B lender. So their savings would be even higher.
Yeah.
And it's just pushing paper, really.
Yeah, absolutely.
Awesome. Yeah. Hopefully everyone got a new tip here. Go tell your accountant. You're a Smith maneuver expert. If they're not, just go buy them the book. Now, when I ask you, what's it like to be married to a crazy entrepreneur? Now, just to clarify that as well, I know a lot of you who are listening to this think you're real estate investors. I would clarify that as you are an entrepreneur in the real estate industry or investing in real estate assets. That still makes you an entrepreneur. All right. Crazy entrepreneur.
Who's a crazy entrepreneur?
Who's crazier between you and I?
Equally as crazy.
Okay.
Mm-hmm.
Yeah, but I think you have to deal with more crap than I do.
I appreciate that comment.
But how about we divide this way? You're the better integrator than I am.
I still don't like to be the integrator.
I know, that's why we delegate further.
Mm-hmm.
Right. How would you describe the way we divide our duties? Because, for example, I know there's lots of listeners who are investing partners with their life partners.
I think we kind of pick and choose whatever our strength is. So in our businesses, you like to build your connections. You're good at talking to people, with other people, hosting events, socializing. I am better at staying behind the scene. I'm an introvert. I know it's hard to believe, but I am an introvert. I like to be more, I like to keep it more to myself. So sometimes if you see me at events and I'm not talking, it's not because of you, the client, but it's because I'm all drained out. I always remember that Simon Sinek's example. If you are an introvert, you wake up with 5 coins. Every interaction take away 1 coin. By the end of the day, you're all drained, and that's me. Mm-hmm. I think with you, I think you're closer to the extrovert side. If you're extrovert, you wake up with 0 coin in the morning, and every interaction that you get, you draw a coin. So you get energized by having the social interaction. Whereas for me, I like at the end, I like it to be reading a book. I like to wind down with just being myself. And usually when I'm at the event, I get really drained out. And by the end of it, I would be hiding. And I always remember when I go to, I remember when I did the presentation at Realtor Quest to over 400 real estate agents. At the end, after the 1-hour presentation, I have to hide. And I hide behind the banner at my booth, even though there were like tons of people waiting to talk to me, ask questions. I had to hide and let my team handle all these interactions, because doing that presentation is exerting a lot of energy from me. But people don't really pay attention to these things. It's just I now get to understand myself a lot better.
Mm-hmm. Well, people don't really know from the outside looking in what people are really like.
So because of that, so I like to deal, and because of my professional degree, I like dealing more with numbers and internal management than Erwin does. So Erwin is the one that's out front doing all the socializing or setting the vision for the business. And he's pretty good at it, and pretty good at making silly names too. Mortgage version is not him. It's from my team. But you have all these crazy name idea.
Yeah, I could have renamed your reports at CCCPA.
Records.
Records.
Yes.
You mentioned realtors. And so of our 12 listeners of this show, I think about 5 of them are realtors. What is a PREC? What's it stand for, first of all?
It's called Personal Real Estate Corporation.
And I don't want to spend too much time on it. Spend a little time on it. What realtor needs it, and why do they need it?
So Ontario government, after years of being lobbied, finally allow real estate agents to set up corporations to operate their business. Majority of the high production real estate agents that do not need all the cash from the business would be benefiting from earning their income inside the corporation. Mm-hmm. Because essentially you're trying to defer the taxes that you would otherwise have to pay in your personal name. And as I mentioned earlier, the highest marginal tax rate in Ontario is 54%. For a lot of high producing agents out there, if you're making like 500, 600,000, and after deducting your expenses, you still net over 220. For anything that you net over 220, the government gets to keep more than you do. The government takes 53 cents for every dollar that you make. So by incorporating, you can shelter the income in the corporation, and inside the corporation, earning small business income, you only get taxed at 12.2. So 12.2 versus 53.5, we're talking about 40%, over 40% tax saving, tax deferral. So when you take money out from the corporation, you still have to pay tax, but it's not double tax.
Right. And then what investments are allowed inside the PRAC?
Inside the PRAC, the mandate allows you to do pretty much everything except trading in real estate directly. So trading meaning having the license. The trading happened with the brokerage.
Right. Awesome. And then we're just talking about realtors and making lots of money. So in case anyone doesn't know, we have open positions on my team to hire. We're looking to hire 2 more licensed real estate professionals, in case you were interested in making lots of money and having lots of fun.
And a lot of your team members actually set up corporation with us too.
Did they all?
2 of them did.
2 so far. Right. And they make good money. So if you want to be one of these folks, we have openings on my team to join. Oh, I wanted to ask you about, there's this virus thing going on. So many names for it. Pandemic, whatever, COVID. And then you're an accountant to a couple hundred clients. Do you have an idea, what were the trends? Who didn't fare well in this pandemic and who did do well? And the reason I ask is, like, what are the lessons? Like, going forward, what should people be focusing on and where should people hedge?
My sample of clients are not a fair representation of average Canadians. We work strictly with real estate investors or real estate agents. And
both need to make good money to afford you. So, so right there is I guess an idea of who makes good money.
So typically real estate investors do well. But occasionally we have clients who have to deal with these bad tenants. And they would be losing a lot of money. Thankfully, there was government support last year. So some of them would be able to qualify for some support from the government. Who did well are the ones that have multiple properties and multiple sources of income. So not just earning income from one source, but they have other sources of income that they can draw out from.
What would other sources of income include?
So a lot of our clients are doing stock option trading. So they have stock option income.
Where do they learn that?
Oh, surprise, surprise. Where do they learn it? I don't know.
A little place called Stock Hacker Academy.
We're stuck doing all the tax returns for all the stock hackers. And people would not believe how difficult it is to do the stock hacker taxation.
Okay, so what are the common questions around stock hacker taxation? Is it capital gains? Is it passive? Should you do it in a corporation?
Those are easy questions to answer, right?
Those are the easy ones.
The actual reconciliation is a lot harder. People always think that, oh, I just print out this report and give it to you. Why? What kind of bookkeeping do you need? Well, you don't need any bookkeeping. But the reality is that report doesn't reconcile. So the trades don't reconcile, and they change it at different. They get converted at different rates, and we're trying to just use
foreign exchange rates.
Foreign exchange rate is one. And the way that they account for the gain and specifically for share disposition, they don't use it the same way as required by CLA. So we have to backtrack and essentially redo the whole bookkeeping. And then people think that, the trading platform already gave us the T500A, which is the slip on the transaction. Why do you have to do any reconciliation? Well, because that thing is not calculated correctly. So just to give you an example, if you buy Apple for $100, for 100 shares of Apple, and then you buy it today, and then 2 weeks from now you buy another 100 shares. So some platform will take the first batch of $100 when you sell it, 100 shares when you sell it. Well, for you it's easy to understand because you understand FIFO, first in, first out. But CLA takes do the math on average cost of your acquisition of shares. So when you sell it, only sell 100 out of the 200, you're supposed to calculate the average cost of your 200 shares and then sell it at that price. But the platform, the trading platform itself may just do the FIFO. So it might just take the first batch of purchase price and assign it as the cost offset against the sale proceed, and that would be your capital gain. So there could be inherently some difference. And then especially for like, it would not matter, assuming that you sell all your Apple shares by the end of the year. But if you have any open position at the end of the year, that would have to be calculated. Now, the second difference is that if you treat trading options as capital gain, the CLA requires you to take the income, take the premium. Like, for example, naked put premium, it has to be taken into part of your capital gain at the time when you write the contract, not when it expires. So if there is any open position at the end, we have to do that adjustment as well. Like, people don't understand to do it right. It's a lot of work.
Yeah.
And it's interesting, even for our team, because we know all these things. It's just that applying what we learned from the Income Tax Act to the actual report, I think one of our client trade using Thinkorswim. And there's a different platform than majority of our clients is trading.
And they do
using.
it differently?
None of the numbers make sense.
Oh, great.
So, and
hopefully
then,
it's all there.
And then layer it on with the US dollars currency exchange. And we just went through an exercise to reconcile one of our biggest clients' portfolio, and there is $95,000 exchange.
Positive or negative?
We thought that that's a foreign exchange, but we have no way to prove it unless we redo the entire years of transaction to prove it. So, which is the reason why a lot of accounting firms out there are actually doing transaction by transaction and converting it at the average exchange rate, because that is how you would know that you're doing it right. We're pulling a report in Canadian dollars, then everything's converted. We don't know if it's right or not.
That's not pretty.
Yeah. And people are upset at us because we're charging to do the bookkeeping, but it is unfortunate. Yeah.
So the people are doing well with this income stream?
Yeah, a lot of people are doing well.
Okay.
It's funny. There was this client that I have had him since the beginning of my practice, and in recent year he started trading options, and it's that he started before we started, and I saw all the losses that he incurred. And so when we started trading, doing the stock option course, I told him, like, hey, like, you should join this course and see what's
wrong.
yeah, and see what's happening. Like, out of the goodness of my heart, I don't really care whether he buys a course or not.
Yeah.
He's still incurring a loss till today. He didn't sign up with us. He's following some US guy.
Oh, good.
And I'm just like, I don't like, are there something else that you can do? Maybe follow a different guy.
Yeah.
Yeah.
That's too bad.
I know. Years after years.
Because we're basically beginners and we're still doing really well.
Yeah.
Even though we got whacked in March, like overall the last 12 months have been exceptional.
Knock on wood. Everything is green today. I could see on the other side.
Everything's green today, but knock on wood. But yeah, even though, again, like March wasn't good for us, but the last 12 months have been exceptional.
I also think that through this Stock Hacker Academy journey, I've seen so many different personalities, see so many people, and of course hiring expand our heart a lot as well, working with different people with different personality. I found that the greatest things to happiness is really appreciate what you have. It really matters. Like there are days that, like it's a stock market. There are days or weeks that the market is going to go down. And then there are days that it will go up. Don't get too high if it's going your way. Don't get too low if it isn't, because it's going to bounce back or bounce down, bounce off, or depending on how you look at it. Yeah.
The nice thing about having multiple streams of income is, like, when the market was tanking last month, like, the joke with our real estate friends is we joke about real estate, because anyone who's been in real estate's done quite well. Are you guys seeing that? Are real estate clients doing well?
I think they're generally doing well. Like, the numbers don't show that, right? Like, what we see is what they report as income. Generally, real estate clients do not report a lot of income because their rental property, the rent is just enough to cover the mortgage. So they have very little on paper, but at least on their tax return.
Right.
I only see the big numbers when they sell, right?
So there are big numbers there.
Yeah, there would be. Rarely we see a sale that would be losing money.
Right.
For sure. Now, I think I just had this discussion with my team member Joanne, and Joanne described this as all these wealth hacking strategy as having 3 children. So she's always being asked, like, why are you doing life insurance? Because we started doing life insurance, whole life insurance. Why are you doing stock option trading? Why are you doing real estate? Well, she said the analogy that she gave, which was perfect for this podcast, is that it's like, these are like your 3 children. It's not an option to have either one or the other. It's the option to have all 3 all together. So when you're real estate, when you have shitty tenants, oops, am I allowed to swear?
Oh, we're going to kick you off.
when you have bad tenants, then you can look at your stock option portfolio. Hopefully it's performing well. And when you have down market and losing money, you can be thankful to have the real estate doing well.
Yeah.
Or
when all of it's up like 20%.
Exactly. So when real estate is doing not doing well, or you have a bad tenant and you have a down market, you can always rely on life insurance, because life insurance is guaranteed.
It's guaranteed.
And it's tax free. So that's the reason why you should have all 3, not just one of them. Pick and choose. You should always have all 3. And then some people counter back and say, like, I don't understand why you're investing in the life insurance, because it's not giving you enough return. You could do a lot better. Well, for us, doing the life insurance is a protection to our family. That's number 1. Number 2 is that you are rinsing through the life insurance, kind of like Smith maneuver. You put the money in there and you take it back, borrow back, and then invest. So you're building 2 assets at the same time. Why wouldn't you do that? It's just being your own bank.
And then any final points on that? Oh, I wanted to ask about stock hacking, because people ask about the update to our competition. So you won. Let's just say you won.
I'm slowly but surely getting back to stock option trading. I have been
busy.
I have been a little bit busy over the last little while. It's tax season as well, right? I don't like
And your business has grown 3 times.
The number of people, not the business. The number of people, yes. Managing people is a very interesting job.
And then what would your style be when you get back to stock hacking, when you get back to selling stock options?
I will,
because we were day trading in this last summer,
which is the reason why I got all these gray hair.
Yeah. So we're learning though. I think it's good to try. Like just like real estate investing, we tell our clients, our new clients, learn. Like, be your own property manager. It's nothing wrong with learning it, because then understand when you eventually hire a property manager. Now you know your style, right? You have your standards.
So I've tried that thing called day trading. I've tried like spread. I've tried long, deep in the money call. I've tried a lot of it. I don't know a lot of it still, but I've tried them all. But what I'm planning to do is really just follow Lee's trades.
Why just that style?
Because it's passive. It's a little bit passive. He sent out the trade. I do it. I just do it mechanically. follow the trade, and then people are still doing well. Susan's doing well.
51% return.
Yeah.
Since
So
May.
I could adjust, his pick.
Yeah.
To the risk that I am happy to deal with. And so I'll go from there.
Right. And just for folks who don't know, anyone who takes Stock Hacker Academy, they get 12 months of Lee's trades.
Yeah.
And Lee is the godfather of stock options, the best-selling author of How to Get Rich with Options, and he teaches the 4 strategies in our course. So that's Lee. So you'll get back to stock hacking eventually. I too plan on trying to pacify a lot of my stuff because I got a golf membership to do my highest and best use in this company, which is to
play.
No, we can call it playing, or
you
could say I'm intentionally sucking, so everyone feels better about themselves, so they feel sorry for me and send us some business.
Yes, golfing is the only sport on earth that I am beating Erwin on.
Yeah, I think our record last year was, I think you beat me 4-1.
I think it's better than that.
So yeah, so at a minimum, you beat me 4 rounds. I beat you once. We'll try to turn that around this year. See if we can get to 500. So that's stock hacking. With the charity, it's funny. With the charity, we talked earlier about like our relationship, how we kind of, we fill positions kind of as needed. So the charity was something that was my idea, and you supported me on it. But one of the big moments for the charity was when we decided to register as a registered charity, and that was actually your doing. That was your idea.
I tend to handle all these side of things.
Right. I think I was just thinking small, but then it's you that said, if we're going to keep accepting all these donations, we need to give them charitable receipts.
Yeah, absolutely. How else are you going to funnel through in the CRA's eyes? And we got asked to provide invoices, and I'm like, I can't provide invoices. What's there to provide? So I think it's a logical decision to make. It's just logical. It's not thinking small or big.
That's 2014. Oh, you were pregnant. No. You weren't pregnant at the time. We had Robin already. But as if we didn't have enough going on in our lives and we started a charity.
Yeah, tell me about it. There's always time. There's always work to focus on. Now we are filming and we're doing YouTube channel. We're doing a lot of other stuff.
Did you ever think the charity would get to this point? I didn't.
So even though Erwin's my husband, but I love to call him the asshole that I need in my life. There are times that he's really annoying, but that's okay. And then there are times that he is really inspiring. So having that charity, having the drive to do the charity work is also very inspiring. I think people don't understand that when we did the 2014, when we started the charity with our friends, we had literally no money. I think 2014, I just started my business as an accountant. That year, I netted $30,000.
That's a lot of money.
$30,000 is a lot of money, don't get me wrong, but I would normally at that age, with my experience, with my degree, if I were to work for a big company, I would probably get around at least 6-figure. So 600,000.
That's what you're doing
100,000. 100,000.
Well, that's what you're doing the year before.
Yeah, so I would at least gross 100,000, bring in that as a salary. And that year I gave birth as a self-employed individual, and I gave birth. So there's no EI, no mat leave. We just got at the time, the new home, which is the one that we're moving out of, a big mortgage too, because it's $600,000 mortgage.
We only put down 5%.
We did 5% down.
Put down $35,000.
So to find the money for the charity work, Erwin has to constantly bug all the real estate investors that he worked with and pull together the money to serve that 20 families, I think. That was the first time.
I think it was 32. I think it was 32 the first year. 32 families the first year.
Yes.
And a lot of those real estate investors owe me favors because I made them a lot of money.
So then we had no money. And we're still doing the charity work. We raised funds to do the charity work. Nobody got donation receipt. Okay,
Nobody.
They just buy the food and donate, and we organize it and we deliver it to the families who are in need in Hamilton. And I think that's an interesting moment because we were doing charity work when we were not really doing anything. And now we're way better. And our mandate is to donate 10% of our net profit from all of our businesses to the charity. And that's the mandate. I don't think Erwin really knows. He always talk about like, donating 20% of the profit from the trading account. But the mandate is really to donate all 10% of all of our business's net profit, which is bigger than the amount that you mentioned in your other podcast. But
can we afford this?
I don't know. I just make it work. I don't know. If you allocate the 10% first, then you will always be able to make it.
Pretty crazy, eh?
Yeah, I think that there are a lot of people that are doing that already in this world.
For listeners, if you're doing this, I'd love to chat with you. Maybe we'll talk about this over a round of golf. My treat.
Like being able to, we're in such a blessed position.
Yeah. We are. And I find what's interesting is two things. I don't always see it. I personally don't see people doing the same thing, but I also know a lot of people keep this really private versus we don't. Because my thing is, if you don't put it out there, you're not going to inspire people.
Which is a good segue to talk about like how other people got inspired into starting their own basket brigade in different region, and they're doing the exact same thing. They might form a charity, they may not form a charity. They're doing their own version of pulling a bunch of funds together and essentially delivering the goods that are in need. So I think it's a great thing. Like we posted, we got the donation from a wholesaler, probably over 100 pair of shoes. That wholesaler was closing and they gave us a bunch of shoes and we need to sort it, organize it, cut out the tags and everything. I think we posted some pictures last fall and immediately I got a response from a university classmate, and she messaged me. We visited her in Vancouver and she messaged me. She grew up in Hamilton. And we visited her in Vancouver because she lives in Vancouver right now. And she said, well, my friend locally in Hamilton needed help. The school that her friend's kid goes to, there are a lot of people that need all these help. We have changed our model from delivering food basket to delivering clothing and shoes.
Winter clothing,
things that the kids need and that can have a lasting impact. I recognize the fact that I think a few years ago that the shoes go a long way, much longer way than buying turkeys, because not every family would appreciate a turkey.
Or know how to cook it.
Yeah, or know how to cook it, exactly. So we changed that model and deliver all these clothing, and other people can see it. And they would then go to, they approach us and see if we would be able to help other people. So I thought that was also interesting.
And like you said, we I don't like to say we would inspired people, but the charity that I joined many years ago in Toronto, another basket brigade in Toronto, we actually exceeded them in size within 2 years in terms of budget and reach, and we registered before they did. And then just 2 years ago, they registered after seeing what we did.
Yeah, absolutely. I think inspire is too big a word for me to use to apply to us. I think we
blazed a trail.
We lead by example. Like and that's always our parenting philosophy, right? Lead by example. And that's why I always get very upset at Erwin looking at the phone.
Yeah, I have a bad habit with that. Stage one is recognizing you have a problem. Before we talk about my own problems, though, we did inspire another organization out of Toronto, another basket brigade charity out of Toronto, and one in the Durham region. But yeah, without our example, I don't think they would exist.
Yeah, giving back is important.
I always remember there's I don't know where I saw it. I think I was out walking and I saw someone was walking their dog and their shirts read, "Be the parent my dog thinks I am." Because for anyone who's a pet owner or anyone who's a kid, like your kids think you're heroes, right? So then I've always wanted to live up to that expectation. I always wanted to be who they think I am. So,
yeah.
So we try.
There was a recent quote that I really like. I need to look it up. In light of that Women's History Month, I think there was a quote posted by Sarah Blakely, who's the
Love Sarah Blakely.
Billionaire who owns this company called Spanx.
Self-made billionaire.
Self-made, and she posted this quote called "Be the CEO your parents always wanted you to marry." I thought that was awesome.
Was that her upbringing? Her parents didn't think that she would. Well, I don't think she ever thought she'd get to that level.
Yeah, I don't think that was her upbringing. Her father always asked her, "What did you fail at dinner every single day?"
That's impressive that she overcame that.
No, she asked he asked her to celebrate a failure every single night.
Okay.
Yeah. So she was good at failing. She is good at getting back up on her feet immediately after failing, and she takes failing as an everyday life thing. It's nothing to impact her.
Interesting.
Per se.
The chapter I'm on in Steve Jobs' book is when just finished a chapter on his venture immediately after Apple, a failed hardware company. But if it wasn't for that failed hardware company, he never would have come across Pixar.
Yeah.
And into the computer image movie making. So that failure had to happen for him to test and experiment in making movies. Pretty crazy, eh?
Yeah, absolutely.
Yeah.
Yeah, the failure is important.
Fascinating. All right. So we're running out of time. I do have a question. So I'm on a bit of an Elon Musk trip. He told me to read the book. What, 2018?
He's an impressive guy.
Actually, before we get into that, you posted something about the tax benefits of buying a Tesla.
Yep.
Actually, what are the tax benefits? What are the financial incentives or tax incentives available for people buying electric vehicles? Doesn't have to be Tesla.
For people who are using their vehicle to run their business, you can always write off a portion of your car expenses, or if you purchase a car, you can always write off a portion of the car purchase. Now, typically, if you were to buy a regular car, let's say if you buy a car that's our Honda Odyssey that we drive, if you buy that car, maybe $50,000 you pay. But if you pay $50,000, the maximum amount that you can deduct is only $30,000 plus the HST, so $33,900 in Ontario. That's the maximum you can deduct. Now, out of that $33,900, the government only allows you to deduct about 30% annually. So $33,000 times 30%, that's the maximum you can deduct. And then multiply essentially by the business use of your car. So it has to be used for business. So the personal use does not count. So you take that $33,900 multiplied by 30% and then multiply by your personal business use of the car. That would be your deduction amount. Now, Justin Trudeau, our prime minister, came out and said, well, I support all environmental friendly initiative. And one of the initiatives that was given was that if business people were to buy a low emission vehicle, doesn't have to be fully electric.
Oh, it can be hybrid too?
I think it has to comply with certain things. Mostly plug-in hybrid would qualify. If you buy that car, for the qualification criteria, you should check out their website because I don't understand the plug-in hybrid well enough.
That's the qualification also to get a green license plate.
Yeah. So if you have that, if you qualify, if you buy that car, now instead of $30,000, you get a $55,000 write-off. So there is a delta. Because historically, it's only $30,000 for anything that's over $30,000. Now you get $55,000. The $55,000, you can claim it as a one-time expense on your tax return.
Oh, the whole thing.
Times the multiplied by the personal use. Yeah, business use.
Yeah.
That would be deductible. Now people ask me, so what if you buy it back? Sorry, what if I sell that car? Then a portion of that would have to be taken into income. Proportionally.
So don't you have a bunch of clients who are buying
Tesla? Yes, we have a lot of clients, especially those real estate agents out there. Like, to me, if you're buying a car and you're buying that like $50,000 range of car, then of course I would choose a EV, like a low emission vehicle, over the regular vehicle because you get a bigger deduction. The catch is that you cannot get any government rebate. If you get government rebate, you automatically fall back into the $30,000 deduction. So you have to pay attention to these details. And by no means I'm providing accounting advice here. Please speak with your qualified accountant. I post this whole how to buy a Tesla and save $22,000 of tax everywhere on social media. And I got a lot of feedback about whether they would buy a Tesla or not. The whole thing is not about Tesla, it's about deduction. And then I got people commenting on the grammar of my post. I hope that I know English is my second language, grammar is not there, which is fine. I just hope that the message come across, that there is that option, and just be aware of it. And then people would quote my article and said, well, in terms of when you sell the car eventually, the tax I mentioned in the in the article that when you sell the car there could be tax implication. That's the topic of another day. And people would say, there was one guy who captioned that in the comment section on my Facebook post and said, well, of course you don't mention these. The tax impact of it's for another day. Criticizing that I don't talk about the other side. My counter to it is that, yes, point well taken, but my post is meant to share the information. I am not there as your accountant, individual accountant. You should always talk to your own accountant. If you are not having any result with your accountant, by all means come to us, but you should always talk to someone qualified before you purchase the vehicle. It's never meant to be like, just buy this vehicle, you get this deduction. Verify it. It's an information. Do your own due diligence.
What? You're not going to spoon feed it to people? So what Tesla are we getting?
I don't know. Our lease is not up yet.
When's it up?
I think next year, May, around 2022.
It's funny because you didn't resist me when I said we're getting a Tesla.
People always tell me, there was comments saying that Tesla you park it at the airport for 2 weeks, you will never be able to get out. And then there are people commenting that it's more expensive to run a Tesla than run a regular car. And then there are so many negative comments about Tesla. But the point is not about Tesla. The point is about the tax deduction. You can buy, I don't know, the future Hummer. Apparently GE is coming out with a... GM is coming out with an electric Hummer.
I saw an electric Mustang yesterday, and that was like, whoa, that's different. The world's changing.
Oh yeah, absolutely.
Yeah, awesome. All right, we're well over time. Cherry, thank you for doing this. Any final words for the listener?
Do your taxes early. If you want to sign up with us, make sure you come in early.
And where can people follow you?
You can follow me on Instagram, Facebook, and YouTube's, and My name, I guess. What's that called? My follower? What's
Your handle?
Handle. My handle is real estate tax tips.
Right. Do you have any books for real estate investors?
Yes. I have a book written for real estate investors called Complete Taxation Guide to Canadian Real Estate Investing.
And they can get that on Amazon?
They can get it on Amazon.
Anywhere else?
They can get it on my website too.
It's free on your website, isn't it?
Free, yes, plus shipping.
Nice. Awesome. But if you're a nice client of ours, you can come in and we'll give you a copy, right?
Yeah, absolutely.
Yeah, and we'll lose money on it. I know some of you want that, so.
Well, my second book is coming out. I should promote my second book.
What's that for?
For real estate agents.
Oh, the 5 listeners that we have on this.
Yes, only 5.
Awesome. So
better than nothing.
Better than nothing. Everyone's got to start somewhere.
Mm-hmm.
And then where can they get it?
Soon.
Awesome.
It will be on Amazon and my website too.
Okay. Maybe we'll have you back.
Stay tuned.
We'll have you back when you release the book. It's probably been too long since you've been on the show. It's hard to get a hold of you, you know.
Where's your office? I think it's just like right there.
No one fits in my office. It's too small.
You can take this office.
I don't deserve the corner office. All right. Thank you again, Cherry, for doing this in the middle of a tax season.
Thanks.